This is the second part of how to draw the support and resistance lines like a pro by TradeRocket Academy. In the previous part of how to draw the support and resistance lines, we talked about the logic behind drawing these important lines. Now let's do 3 practical examples to make a concrete understanding of how this works. There are 3 main trading markets: the currency-to-currency market, the stocks market, and the cryptos market. For a typical example, in each market, the overall risk and benefit increases as you go from level 1 to level 3. We'll do 3 examples, one for each market, to make the concept of resistance and support as clear as possible. The first example is Canadian dollar to US dollar, and this is the daily time frame. Our strategy is going to the larger time frames first, and then go to the lower time frames. We want to be able to track the exact date range you are looking at. Therefore, it's always useful to draw a box around the interested region. Now, if I change the time frame to the weekly time frame, this box lets me look at the exact same range. For your reference, this is the daily candle of the same box. These dips in the weekly time frame can be found perfectly in the daily time frame, but with a much higher resolution. And finally, the last dip in the daily time frame is actually hidden in the large shadow of this single weekly candle. This is exactly why we always say every weekly candle matters. Now let's do the analysis. We have a sharp reversal here that tells us that there is a support here, another one here, and another support, and 2 regions that tells us that there is support and resistance in these 2 regions. Now look at these 2 regions. Remember the second and third golden rules: multiple struggling candles in a row and multiple testing of the same price. Look at these 3 multiple struggling candles in a row. We have a support here. Look at these 2 boxes. Multiple testing of the same price but at different time. We have a resistance here. Another case, same rule. We have a support here. We are done with the weekly time frame. Now let's go back to the daily time frame. This box is all we looked at in the weekly time frame. The general trend of the high resolution charts is perfectly consistent with the resistance and support lines we drew. But if you look closely, there are some regions that were completely hidden in the weekly time frame. 2 golden rules again: multiple struggling candles in a row and multiple testing of the same price. We have a resistance here. Note that I drew a dashed line, because the daily time frame resistance and support lines that are hidden in the weekly are usually weaker than the weekly time frames, but we still need them, hence dashed lines. Look at this case: multiple struggling candles in a row plus multiple testing of the same price. We have an interchangeable line that its role varies at different times. Multiple candles testing the same price, another support line. And finally, one extra daily support line for the tip of this sharp reversal that we could only see in the higher resolution. And always remember to put a thick line right on top of the highest price, as it can come handy when you're about to break the all-time high of an asset. Now, this is where the magic happens. The box is the past data we looked at. We had no idea about the future when we drew these lines, yet you can see that we perfectly predicted all the future pivot points of the chart. And even the all-time high special resistance line clearly showed us the major reversal in the future. Let's look at this more closely. In this range, there are multiple pivot points. Let's look at them one by one. There are 2 here. The first one was quite weak, hence not that important for the overall scheme of our analysis. Therefore, we did not predict it. But the important one that caused the major decrease in the price is perfectly predicted. Then the candles go down and stuck between 2 main support lines we drew. Then they go up and then go down. These 3 were predicted perfectly. Then we have this major case, that the candles bounce between 2 weak support and resistance lines that are predicted perfectly. Let's take a look at another range, this time a faster analysis. The price went down, the momentum of the candles decreased significantly after hitting those strong support lines, and then it stopped at the dashed support line. Then the price went up and it stuck at that dashed resistance line. Then it went back down The momentum again decreased. You can say that by seeing how size of the candles are decreasing. If you have a major pivot point, then the price goes up and then goes down and hits that very strong support line. Then the whole trend changes completely and goes up. It struggles a bit as it's hitting a relatively strong resistance. Then when it breaks it, we have a noticeable increase in the price. And the candles goes down, they struggle a bit between the lines and then goes up. You can see that the general trend of the future data were perfectly predicted using the previous data by simply using the real power of support and resistance. An important note, lower time frames can have weak or fake resistance and support lines that are not scientifically justified. As a general advice, do not go to the very small time frames unless your trading strategy strictly requires that. Now let's take a look at a more advanced example, stocks market. This is the daily time frame of Tesla's stock. As always, we draw a box around the region of analysis to avoid confusion after changing the time frames. This is the weekly time frame of the same stock. The box corresponds to the exact same date range as the daily time frame. We can perfectly see all major dips of the daily time frame on the weekly time frame. First step is following the golden rules. Sharp reversal, we draw a support line here. Another reversal here that is consistent with the close and open prices of these two candles as well, another support line. Look at these two bouncing shadows from the same price. We have another support here. Another set of candles with the same rule, we have another strong line here. Tip of this candle is consistent with the closed and open prices of these four candles. We have a strong line here as well. But that doesn't mean that we should ignore the tip of their shadows. So we have another resistance here that is later changed to a support. These two candles have two shadows with a pretty much same price range, so we draw another resistance here. These two opposite shadows are in a close match with this shadow, so we have a pretty strong line here as well. If you look closely, you can notice that we didn't miss a single candle here. Always remember our motto, every candle matters in the weekly time frame. Now let's take a look at the daily time frame. The best part of comparing this with what we drew from the weekly, the higher resolution daily time frame candles are in a perfect consistency between what we drew from the weekly time frame. And in fact, there is no extra line to draw here. So we are good to go. Again, now is where the magic happens. The left box is the past data that we use to draw these lines. We are at the present, and we want to see the efficiency and performance of these lines for the future data. Let's look closely at the future data. There are multiple reversals in this area. The first one is down here, where the candles stopped at this very strong support line, and the trend experienced a huge reversal. The support line perfectly predicted this. Then the candles went up and hit another strong resistance line, and the momentum of candles were decreased significantly. You can see that by comparing size of the candles. At first we had a large green candle, and then the sizes started decreasing after hitting each of the resistance lines. Therefore we had another reversal down here. This was the most challenging part of this chart. You can see that red candle tried really hard to break that support line we drew, but it wasn't successful. We can see that none of the candles were completely outside of that line. This means that that last support pretty much took most of the momentum of the red candles. Therefore, we had two very strong green candles and then multiple candles between two resistance and support lines we had, and multiple struggles between those. Finally, the price went up and multiple candles hit that strong resistance lines we drew, and successfully they all went down and hit another support line we drew. Pretty much all resistance and support lines acted very effectively in this chart. Now let's take a look at the other part of this chart. This time, a much faster analysis. The candles went down, hit this strong support line, they went up, hit another one, they went down. You can see the shadow of the candle barely touched that strong support line, and then we had a bit of struggle, and then when it could completely break the resistance line, we had a strong increase in the price. Then the candles were stuck in that resistance line, then we had a decrease in the price, and so on. You might have noticed that our strategy is drawing these strong lines in the weekly time frame first, and then double checking the line we drew in the daily time frame, which has a higher resolution, and then adding the weaker lines. But you might wonder why we do this. Why not going to the lower time frames and add even more weak resistance and support lines? So let's take a look at the same time range, this time in the 1 hour time frame. The first impression is that pretty much all the important reversals are perfectly predicted using the higher time frames. This includes some of the very challenging ones, such as this very long shadow that stopped at this strong support line, or even this double candle that perfectly stopped where it was expected. So we can precisely use the higher time frames to predict the important pivot points. But that's not the only reason to not go to the lower time frames. When you go to the very low time frames, you directly increase the number of available candles, and that can cause a significant confusion due to the existence of many weak support or resistance lines. Let's take a look at a few examples. In this area, there are multiple instances that weak resistance or support lines, or as we call them local resistance or support lines, cause a bit of disturbance in the trend. If you want to draw all strong and weak support and resistance lines, then the chart would be very confusing. Hence, the resistance and support method loses its predictive power. This is another region that you can see multiple weak or local resistance support lines that can mislead our trading strategy. That's why we always recommend going from the larger timeframes like the weekly timeframes first, and then go to the lower ones to add a few weaker support or resistance lines. However, if you are a fast intraday trader, you might want to go to the lower timeframe such as 4 hour, 1 hour, or even lower timeframes. And you can apply the same method of going to the higher timeframes and then going to the lower timeframes to order them based on their strength. The third example is the most advanced ones. This time, we're gonna do an example from the crypto market, which is highly volatile. The final example is for Bitcoin. This is the daily time frame of Bitcoin to USDT on Binance Exchange. As always, I draw the analysis box to be able to track the exact date range in different time frames. Now let's start the analysis from the weekly time frame. For your reference, this is the daily time frame of the exact same range. We can clearly see the main reversals of the daily time frame on the weekly time frame, but with less candles, to essentially filter out the weak resistance and support lines. Now let's do the analysis. We have a reversal here that shows the exact location of a very strong support. We have another reversal up there with an opposite direction, giving us a clue about the strong resistance here. And another similar reversal, meaning that we have another resistance up there. Now from the second rule, we see multiple struggling candles here. Therefore, another resistance is up here. Every candle matters in the weekly time frame. Look at these two candles that tested the same price range, but at different times. We put a line in the middle of both. Similarly, we have two shadows with opposite directions, showing an important price range here. Finally, look at this very strong sharp red candle. This has to be a sharp reversal in the lower time frames that is shown like this in the weekly time frame, hence another support line. Now let's take a look at the daily time frame of the same analysis box. Look closely at these arrows. Two golden rules are happening here, multiple struggling candles in a row and multiple testing of the same price. This time, I drew a dashed line to include this in our future analysis and at the same time separate it from the weekly resistance and support lines. Similarly, in this area, we have multiple struggling candles that tells us about a noticeable resistance line here. Finally, right above the solid line we drew, we can see another relatively minor support that has stopped a couple of strong candles, so we add a line here as well. Now is the evaluation time. The left box is the past data we used to determine these support and resistance lines. We are at the present, and the right side are the future data relative to the present location. The first impression is that pretty much all pivot points and all reversals happened at the expected locations. Now let's take a look at some examples in more details. In this area, we have multiple pivot points. Let's look at them one by one. At first, we have the start of a strong bearish trend that continues to break 3 support lines until it stops at the 4th support line. In fact, they act as a break until they stop the downward trend. We have 2 major struggles. The first one is a weak support that could easily distract our trading strategy, but we correctly didn't have any line there, as we knew the struggle wouldn't last for a long time. And the price went down significantly until it hits multiple support lines that are shown on the chart, as it was expected. Next, the candles go up with 4 minor struggles or reversals. The bottom ones are quite weak, therefore we didn't draw strong resistance or support lines in those regions, and we can see that they didn't cause a major reversal. But on the top candles, the solid resistance line correctly stopped the upward trend and warned us about the possible decrease in the asset's price. Let's take a look at another region, this time a faster analysis. The price went down and perfectly hit the weak resistance or the dashed line first. The momentum decreased significantly and made a shadow that hit the strong ones. Then we had a huge reversal, the price went up, the momentum started decreasing after hitting the dashed line, and then it stopped at the first strong resistance line. Price went down, caused a minor reversal, and started bouncing after hitting the dashed lines. Then the price went up, broke multiple resistance lines, and started struggling between the resistance and support lines we drew. Therefore, we can see that pretty much all pivot points and all reversals in the chart were predicted perfectly using a small box of information from the historical data. Thank you for watching the second part of how to draw the resistance and support lines like a pro. Subscribe right now if you would like to find out about our newest videos before anyone else. Also, comment below all your questions, we'll address them in the future videos.